Good morning or good afternoon to everybody, depending on what time you're watching this. Today I want to dive into one of the biggest geopolitical events that's kind of on the horizon right now, and that's just the rising tensions between China and Taiwan, what this means for the global economy, what this could mean for stock markets as well as emerging market funds. So let's kind of get into this a little bit. Right, so for months now, the tensions between China and Taiwan have been increasing. And recently, China's aggressive rhetoric as well as military exercises near Taiwan have also been increasing concerns that China might try to take over the island. Well, the issue is Taiwan is also a pretty big player when it comes to global trade, especially within the technology industry. So whatever happens within that region could have pretty big ripple effects on the global economy. So right now, Taiwan is home to some of the largest as well as the most important semiconductor manufacturing companies out there. And these are companies that are responsible for making chips from everything to cell phones, laptops, medical devices, defense systems, whatever it may be. And in fact, the Taiwan Semiconductor Manufacturing Company actually accounts for 50% of the global semiconductor market. And so any kind of disruption in Taiwan could obviously have some pretty significant bottlenecks in the global tech supply chain. So if military conflict does break out between China and Taiwan, this could have some pretty big global supply chain disruptions. This could be product shortages, it could be higher costs for tech companies, it could also be downward pressure for stock prices for companies that are relying on semiconductors like auto manufacturers, consumer technologies, as well as just any other tech company. So now what does this mean then for global markets? Well, historically, whenever there's geopolitical risks that rise, stock markets naturally tend to react negatively, especially in the short term. So then investors tend to flock towards more safe, conservative type assets, whereas more volatile assets like stocks, particularly in emerging markets, tend to have more of a steep decline. Now, obviously, US and European markets are not going to be immune to this level of risk. Large multinational companies, particularly those in tech and manufacturing, could take a big hit if trade routes in the Taiwan Strait, which is a major global shipping lane, is disrupted in any way. Now, for investors who are already invested in emerging market funds, this is kind of unfortunately a double-edged sword. On one hand, China usually accounts for a pretty large portion of most emerging market funds. And then also, too, the Chinese economy could face some pretty major complications if conflict escalates. Sanctions, reduced foreign trade, or trade restrictions obviously have that downward pressure on Chinese equities, which then have that ripple effect on emerging market indices. So it's also not just about China. Other emerging markets, particularly those in Asia, could also see increased volatility. So obviously Taiwan, but also South Korea or other Southeast Asian economies are all deeply intertwined with both China and the global economy, right? So if tensions do tend to escalate, expect emerging market stocks to be highly sensitive to any news that comes out of that region. However, while the immediate effects of this could be negative, it's always important to remember, as well as to both think long-term and just to remember that geopolitical risk is nothing new. This isn't going to be the last time we go through it as well, and this stuff doesn't stick around forever. So if you're an investor out there that has a higher risk profile, times of increased volatility within the stock market sometimes could potentially create some opportunities to buy some stocks at a discounted price. Also, too, on another hand, countries like the United States as well as Japan could benefit from this as well. Some companies might start to diversify their supply chains away from Taiwan as well as China, and this also creates growth in other regions. To sum it up, the China-Taiwan situation is one that we're paying attention to closely. We know that it could have a massive effect on the global economy, the trade supply, stock markets, as well as emerging market funds that are already in our portfolios. But with careful planning, as well as just kind of more of a balanced approach, we can kind of navigate through some of this uncertainty. I know today was kind of a long video, so if you made it this far, I appreciate you sticking with me. You might have a lot of questions, and if that's the case, go ahead and just drop them in the comment section below, or go ahead and personally reach out, and I'll do my best to reach out to you guys. Take care.